Hey everybody, this is Jose Blasco. We are about to get started. Please go ahead and type a quick message on the chat box so I know you hear me. Just a quick hello will do, so I know sound is good and we are ready to get started. Please do that when you have a moment, because again, it's very helpful on my end to know that all is good. So we just start and we go straight into the market, straight into the charts and ready to begin. I'm going to turn on my video stream as well in the meantime, so I can say hello here from the bottom right corner of the screen as always. How are you, Siderman? Good to see you. Ahmed, how are you? Good to see you all, guys. Very nice. Okay, well, we're basically 10 seconds away before we get started. It seems everything is working fine. Clive, how are you? It's good to see you as well. Very nice. So, my friends, it's time to get started. Okay, so I am highlighting the disclaimer for you to read it carefully. Please indeed go ahead and read it carefully. This is important information. Trading implies the use of real capital. There is real risk. Again, nothing new if you attend the sessions in a regular basis, but in any case, it's always a good thing that you read it carefully. Agenda for today, we're going to be looking at the current market environment, understand what's happening out there, especially looking at the S&P, the VIX. From there, we'll move into trade opportunities that we have running at this moment in time. We'll review those trades, talk about trade management, if anything needs to be done to those trades during the life of such trades. And from there, we'll move into what normally is the most interesting part of the session, which is when we are finding new opportunities, planning them, and executing them. That's the plan. So let's begin. Yeah. And by the way, I always and I received an email today, and normally I always jump straight into the charts. So let me pause for a moment here today before we get started. This is the place, tradewithufos/live. Okay, so tradewithufos.com/live. This is the place where you guys can consult the calendar of the sessions. This is also the place where you can log in and attend the session from the trading room, okay, the private trading room that we have on our website. Here's the calendar of sessions. As you can see, the blue color ones are the ones for options. Okay, so this is the place where you go. And my recommendation is that you get yourself into whatever session that you want to see or you want to attend, I should say. You click on it, okay, and the moment you click, another box will open, okay, and there you can actually click on a link, okay. So it says click on this box, use the infinite link, which is up here, and when you click on that infinity link, so you can go ahead and add those sessions to your personal calendar, and therefore you don't miss the sessions. Okay, so I always forget to mention this, and hopefully this is useful to you guys. Okay, in any case, the question is the session is being broadcasted simultaneously in many places. So we have traders connecting with us from YouTube, from Facebook, from Twitch, from all sorts of places, and of course our private room. Okay, so hello to all of you guys, and please do not be shy, even if you are in any of the public places, any of the public spaces such as YouTube. Anyway, so let's begin with our market analysis. Okay, so what do we have? Well, we start with the daily time frame of the S&P that I have here on the left, and when we look at the climate of this market, we can see that the climate is up and confirmed, and today we are reaching 7 out of 7, okay, which is what we discussed yesterday, that today we are kind of reaching the statistical end of the climate, and of course, sometimes a climate will stretch beyond 7, and it's going to last more, but statistically speaking, this is what it should do. A normal thing to happen would be 7, so anything above 7 now falls into a less likely territory. So again, if you see the market correcting, will not be a surprise. Notice how the market tried to correct today, but given the existence of the UFO right there, that UFO pushed the market back higher. Okay, and if the market continues and more UFO showed up above, so then the climate will be likely going to propagate beyond 7. Now, if no other UFOs show up, or let's say a red UFO shows up, so next thing you know, there is a lot of room from that UFO to that UFO, and that would very likely imply a change of climate for 2 candles or so on the way down until it changes back to blue and keep going higher. Okay, so this is what we can see based on the price itself. Now, just like yesterday, we can also see today, and today there is a little bit more, a little bit greater divergence, not too much greater, but if I'm not mistaken, yesterday it was 1067 for the call and 11 for the puts. So today we got implied volatility, continuous real-time implied volatility for the calls 10.33, continuous implied real-time volatility for the puts 11. So in other words, there is more premium built in the puts than the calls, and that is either because more people are selling calls or more people are buying puts or both. So as we know, this is not helping for the market to continue moving higher. Now at the same time, this is just one ingredient out of multiple ingredients. So again, the climate is blue, UFOs are there, that's the most important thing. But it does look like on the options markets, there is concern, there are people buying puts, and that's what's happening. Okay, if we were to look at the options volatility map, we can see a little bit of a fight. It's very similar to yesterday if you think about it. So 1.2 times more calls than puts, 1.4 times more puts than calls, the opposite. 1.0, so same amount of calls and puts, 1.3 times more calls than puts. So it's a little bit of a fight. It's not really clear. Those numbers are 1.2. I mean, if it's not like 1.7, 2.0, something like that. So those numbers don't mean too much, which kind of confirms and represent all these very static type of indecision candlesticks that we can see on the chart for multiple days now. Okay, coinciding with the entry of more puts. Okay, so again, what I would expect indeed is that with all of this, it's looking like the market may have a little extra push to the upside, but probably soon is going to have a little bit of a correction. Okay, this is what I would assume. So when looking at the VIX, okay, so the VIX has been moving lower. Okay, so those red UFOs that we saw yesterday and other UFOs that formed overnight as well, they helped the VIX to go lower. Currently, we are talking about 15.82. It's not very high premium. It's not super high, but again, precisely because it's quite low, so it's getting to a territory where it's more likely it's going to bounce up than keep going lower. And in that sense, that would coincide with what we just saw on the chart of the S&P, which if the S&P corrects, typically the VIX would go back higher. So that's what we have. And as always, the last of my intentions when we look at the market environment is to bias you to now go ahead and short stocks or go ahead and go long stocks. Remember, we do a market analysis to understand a bit better how to manage our portfolio, meaning that let's say you are loaded on long positions and you can see some puts kicking in, some potential for the market to correct. So maybe it's time to enter some shorts to offset and hedge your longs. And again, this is the purpose of doing this market analysis, which is to pre-plan ahead of moves that may go against your portfolio, so you can add some positions that act as a hedge. Okay, so yeah, so anyway, so with that said, let's review some of the trades that we have running. So here is TradeStation, and we have a couple of trades running. Actually, we have one more from yesterday, GLW, isn't it? I forgot to put it here. So SKT, okay, this one is a trade that I didn't get filled. Okay, I did not get filled on this trade on SKT. I don't have it here, but we talked about it. This is a trade that it's pretty likely going to not to end up in a good position. We need to be above 21 before August 20 to profit on this trade, and it's not looking like that's going to be the case. So again, I will not review what we commented yesterday because we already did this review yesterday, and it's exactly the same comment, which is let it be, let it do its thing, and we may end up with a big surprise if the stock was just to rocket up like it could do, like it did here, right? So this could happen, but again, it's not so likely. First Solar is the next trade that we have. Okay, I'm seeing your comments there on the chat box. Mario, how are you? Yeah, Christian, not an issue. We'll be looking into some shorts as well today. And Ahmed, you did not get filled for GLW. Same happened to Siderman. I saw your comment earlier, Siderman. And again, it's not the most liquid stock in the world. Okay, so no worries, guys. If you have your order there waiting to get filled, just leave it there. Be patient. Remember, that was a long-term iron condor, right? So there is no rush on that one at all. And in the meantime, we're going to plan on other trades today. And ideally, we'll find stocks with a bit more spice when it comes to liquidity, and you're going to get an easier feel. Okay, so we'll look at that. Now, First Solar. Okay, so First Solar, it's working well. So the stock is up 0.4% today. Again, when we look at First Solar on TOS, so we can see per contract at the moment is making $180+ per contract. So nice. Now, same comments as yesterday. We are reaching an exhausted climate, 9 out of 6. So we should see a correction at some point. Corrections on First Solar typically are 4 days. And we can also see a bit more puts than calls kicking in. Now, again, stocks depend greatly on their grouping, depend greatly on the S&P. So again, it really depends very much on what else is happening out there. But we commented that yesterday. We discussed this yesterday, so I'm not going to repeat the whole conversation, but I want to remind you that all of this started with an early climate on the weekly time frame. Okay, so what I was looking at now is the daily time frame, but this market started with candle number 2 on what statistics suggest could be climates of 8 weeks. Okay, so there is a lot of room, or at least statistically speaking, potential for the stock to expand. May need to correct a bit before it expands, but it's all part of the game. It's all part of the plan, and therefore, no need to do too much. Okay, so we are just gonna wait. Christian and Sarah, you just got your 21 cents on GLW. Very nice. Okay, patience pay. Very good. So you are in the trade. Okay, and talking about GLW, so let's take a look at GLW. And in this case, and I did delete my drawing. That's my bad. But I have my notes here. So with GLW, we are doing a short iron condor. Basically, we are not making money. We are not losing money at this moment in time. We are using October 15 expiration, right? And so October 15 expiration. I will draw my lines before the next session. There is no rush. October 15 is very far away, isn't it? It's all the way there. So again, that stock is supposed to remain trading, between here, okay, and here. Okay, this is the range of price that we are expecting. And again, so we'll talk about the management of this trade, when the time comes. Right now, there is not much to do, at this moment in time. Okay, so again, it's a long-term iron condor. We'll probably be able to do many things, because the beauty of having very long-term expiration iron condor is that you can do many things during the life of the trade. So it's going to be great, educationally speaking. We will probably increase the performance and profitability of this trade as we tweak it throughout time. So it's gonna be a good one to have. In the other hand, of course, when an iron condor is so long term, then the efficiency of it is gonna be much less than if we do iron condors, which are 2 weeks away, 3 weeks away, 4 weeks away. In this case, it's like 60+ days. So again, it's not a very common case, but it's gonna be a good one to learn from it. And it's a very low risk trade as well. So that was good. Anyway, with all of this said, we just done our review. We took 12 minutes to go over all of those reviews. And from now, we're going to start getting into finding new trades. Okay, so let's do this. Let me bring the matrix. And let's continue from where we left yesterday. Okay, so let me bring my floating window here. Here we go. So yesterday when we left, okay, I was scanning for stocks with daily neutral strength and weekly neutral strength. I want my stocks to be from my list, which is the penny increment options list, right? And when I scan for that, let me make sure everything else is removed. We exclude stocks that report earnings in less than 3 days as well. And then stock filters is all out. Perfect. Okay, so I got what I need in my filtering. Here on the top, I am also filtering for historic volatility compared to implied. It's above 2 standard deviations. So those options are supposed to be very pricey. And when we do that, we end up with Sienna and CRM, where we tried those 2 symbols yesterday. they didn't work. I could certainly try today. Market conditions change. So if I look at the S&P and I look at the implied volatility, the real-time implied volatility calculated. It's funny because the VIX is down, isn't it? But when we calculated ourselves manually based on the binomial model, actually it shows a bit higher than yesterday. Yesterday was 10, today is 11%. Okay, so those values, may diverge at times. Okay, which again, it's part of options trading. So, because we got 1% extra volatility, some trades that didn't work yesterday may work today. We could, okay? But at the same time, 1% volatility is very little. So probably we would end up with a similar situation. So I want to remind you what I did yesterday. Yesterday, I was looking at advanced option scan. I was looking at implied volatility mean greater than the 80 percentile, okay, with my neutral zones. I ended up with BHP. Actually, the same stock is showing up. Okay, I ended up with BHP. That stock, was not inspiring us to do a trade. Earning supposed to happen on the 16th. There were not too many expression days, only monthlies, so we decided not to. And then because this was a very extreme condition of very pricey options, we went to another condition which is also extreme, but extreme in a different fashion, which is implied volatility mean minus historic to be above 2 standard deviations. We did that, and that's how we just saw Sienna Corporation and Salesforce.com. And again, we looked into it, and we said we're not going to do it. Okay, so then the last case, okay, that I believe I discussed yesterday was, okay, so let's be a bit more flexible with the premiums that we require, especially when we do our own condors. It's not that critical that options are the most inflated in the world. Okay, of course you want overpriced options, and the more overpriced they are, the better. But let's face it, that normally happens in very key occasions. It doesn't happen all the time. So if you only want to take trades where everything is to an extreme, probably this translates on trading less often. Which nothing wrong with that, but when you do spreads, and an iron condor is indeed a spread because you sell options and you buy options against. So then there is a great level of offsetting of the Vega exposure, and therefore not going for such extremes on high or low volatility, depending on the trades that you do when you're dealing with spreads. It's indeed reasonable. It may put you at a lesser advantage, but it's indeed reasonable from a race point of view. And then, of course, because we're going to build the spread with the spread select tool, and so I think I did show that yesterday, but just in case. So here is a skew tool, right? So let me, for example, pick, we're looking at CRM, for example. So I'll look at CRM. So if I look at CRM and I load multiple expiration dates with different colors, so notice how normally you get what is known as a volatility smile. So most of those distributions look, sorry, not like that. That was not very good drawing. They look something like that. Okay, that's the typical volatility smile. But notice that some strikes are more a frown, right? That like the pink one is more like a frown instead of a smile, which means that you would expect either from here to have a smile going like that and going like this, right? And therefore, that particular strike 235 happens to be a strike which is abnormally, okay, this is not a normal thing, but it is happening in the real world. So it's abnormally low priced at an implied volatility of 30 instead of what a normal thing would be, let's say 35, right? So again, we're not gonna go the route of every time we do a trade chart, all the expiration dates, all the calls, all the puts to see what strike may be abnormal, because this equals an opportunity. But again, it would be a lot of work to click everywhere every time. So what we're gonna do is that with the spread select, we're gonna generate 99 spreads, okay? And the one that gives you the greatest return on investment is probably because one of the options built in has an advantage, okay? So again, we don't need to go for those extremes of volatility all the time, since now we're gonna do all sorts of combinations, and sometimes, okay, and this we have no control about it, but sometimes we'll be able to use strikes that have some sort of an advantage, either because they are very low volatility or because they are higher volatility than expected. Like, for example, when you have a frown where this guy, or this pink line could also have been like that, and therefore this guy here, it's higher than what it should be if it was a smile. So and by the way, the smile thing, just in case you don't know, basically responds to the fact that strikes that are either out of the money or in the money, meaning either above or below the at the money strike, the further away they are, the more implied volatility they have. Okay, even though the cost of the option is less, the amount of implied volatility is more, meaning that, given the probability of the option, you have to pay more for those options. Okay, even though they are less probable based on a lesser delta. So that basically translates, if you graph it, on a smile, right? But again, not always. Or what if a big institution came to that strike and just sold 1,000 units of those contracts for one particular strike? So next thing you know, that strike is going to drop in value, and that's our advantage there. Okay, cool. Okay, so long story short, I was saying we don't need to be that picky, even though I like to start picky. So my process, and I invite you to kind of replicate what I do, even though you can change the sequence, and that's part of your trading plan. But I would normally look at implied volatility greater than 80 percentile. From there, I would move into implied volatility minus historic above 2 standard deviations. And if any of those works, then I'm going to look for my mean and look for the one that increased the most in the last 5 days. Okay, the options where their implied volatility went up the most in the last 5 days. Okay, so there is a lot of premium entering those options. So I'm going to be able to collect, a significant amount of premium, because it's going to be the one that gained the greatest amount of premium, out of the whole US market, or in this case, out of my scan list. Okay. Cool. Okay, so now notice how the list is way longer, right? And we got Sienna, we got CRM, but then we got many more. Okay, so now if you look at earning dates, Sienna and CRM are September expression. Then here we got October 5, October 27, August 18. So we got multiple possibilities. Okay, so I'm just gonna go one at a time. I'm gonna move this box to another place on my other computer screen, so it doesn't bother us, but I'm just gonna go one at a time. And the next one in line is FITB, and with that I'm just gonna go ahead and skip it. Why? I mean, it's not like you have to skip it, but immediately notice how we only have 2 vertical lines. That tells you that it's only monthly expression dates. So I prefer to give myself the opportunity to do iron condors with options with weekly expression dates too. So potentially I'm going to be able to find more flexible setups that help me to potentially be more profitable. Okay. So the next one in line is Micron. Okay. Micron, which is going to report earnings on this particular date. Okay. Which is far. It's October 5. And it's dropping extremely hard today, like 7%. Okay. Volatility is rising. Real time is 37%. So again, with such a drop of 7%, my concern here is, we may not have UFOs that are near, and therefore I end up with this very, very wide range. Okay, so again, in order to save a little bit of time, I'm just gonna go find other stocks, because if the stock didn't move that much, like 7% in one day, so typically you would have more UFOs nearer to price. That allows you to set up iron condors with tighter ranges, which normally end up with more yeses than nos. So out of saving time, I'll skip it, even though it may be absolutely valid to go through the analysis, and you may actually have a valid trade. I would not be surprised, to be honest, but it may take more research. So I'm just going to move to Western Digital and see if this, oh wow, and this one as well, 8% down. So yeah, 45% implied volatility. So Micron and Western Digital are getting hurt very badly. I'm guessing that this may have to do with news or things like that. To be honest, that would not change the mindset I would have to do the trade. But again, if you got an 8% move, your UFOs in the intraday timeframes are likely going to be very far away. Okay, so back to the next one in the list, which is USB, US Bank Corporation. Okay, and let's find out, what we can do with this one. Okay, so anyway, earnings happening here on October 13. This is quite far from now. Statistics suggest price is going to stay within the cones. In this case, notice that the historic volatility is actually projecting a statistical range which is more pessimistic than the implied volatility, which is the red color line. To be honest, it doesn't matter. We just go for the worst case, okay? And so what I'm going to do is I'm going to start with 2 weeks from now, okay? And I'm going to start with, yeah, here we go. 2 weeks from now, and I'm just going to draw what the statistical range would be 2 weeks from now, and do a bit of analysis there and see what's possible. And depending on the UFOs and the intraday timeframes, I may go ahead and change the location of my lines and my cone and everything else. So I'll move to the 55-minute time frame. With the 55-minute time frame, we got 52%, so it's 48 or more, so looking good. If we look at our setups, which is at least 2 UFOs above, 2 UFOs below, so we can see that beyond that line, the UFO, sorry, I just draw the line vertically instead of horizontally. The UFOs that we will want to use in this case is this one, isn't it? So we got 1 to 3 UFOs below. And what I'm going to do now to try to be as centered as possible is to go ahead and measure the distance in this particular case and move that line to the upside, and therefore notice how it's looking like relying on this set of UFOs right here, with basically put me in a position where the current price of that stock is very well centered. Okay, and again, so now the question is, are we going to get paid enough or not, or what? And of course, that now we need to put the trade together. Okay, but again, we are looking at putting a trade. I think I didn't draw this line right. It went vertical instead of horizontal. But basically, statistics suggest the price can, should not surpass 60. We are setting our upper range to be 61 point something. Okay, so this is the type of trade that we are shooting for now, and the bottom part 55.67 would be the bottom part of the range. So we got the setup on the chart. We are now ready to put the trade together. So time to call Mr. Spread Select for USB. Okay, I'm going to maximize this. Okay, and we're going to go ahead and we said, okay, we're going for August 27. So I also want to check August 20. I want to check those two. I'm going to select a type of spread I want to be, which is a short iron condor. I want to go up and down both. Minimum range based on the option chain is 0.5, but we're going to start with 1. And again, that stock is a $50+ stock. So to me, it doesn't make sense to go ahead and have a maximum range. Remember, the range is the distance between the options you buy and the options you sell. So that sets the risk, right? If you do an iron condor, and for example, like here, you sell the 58 put and you buy the 57 put, there is $1 difference, and therefore your risk is $100 minus the credit collected. So in this case, I'm happy to go all the way to $5, but I would kind of like not see this to make much sense to go for $10 or $20, for example, because again, it's such a cheap stock, $58, so it doesn't make sense to go that far out, okay? Now, with all of these selected, so now I'm just gonna build 99 iron condors. That's it, they are all built. And now, of course, I need to filter out the ones that are good versus the ones that are bad. So I'm gonna do that by loading my template, which is the iron condor preferred parameters. We covered that yesterday, so if that's okay to save time, I'm just gonna click OK and sort my filter and see if anyone passes or nothing passes. Okay, and let me, I did not click update. Okay, so yeah, so nothing passes. Okay, nothing passes, and yeah, and definitely August 20, it seems that is no way. So what if I do August 27? So if I do August 27, yeah, some of the strikes have very little premium, like here, 1 cent. Let me sort this again. Yeah, nothing. So it seems that with August 27, we are not getting premium enough. We need to be selling options around, we said 55 something. So 55 something is paying, yeah, it's paying 22 cents. And one of our rules is that we won't take the trade unless the options we sell pay us at least 35 cents. So we are not getting premium enough. That's the problem. Okay, so again, not a problem. We're just gonna move to the next expiration date. Okay, and let's see if that passes or not. Okay, and it seems that it doesn't pass either. So probably the premium collected still not good enough. Yeah, 37 to 41. In this case, it could be maybe. So what is it? Is it the return on investment that is stopping this trade from being from passing? Let me, yeah, exactly. That's the return on investment. So, okay. So if we do this trade, let me see. Oh, yes, I got the wrong expiration, guys. Sorry for that. Yeah, so the problem is that, yeah, let me get max here. So that should be good now. Sorry, my bad. Max profits 155. Yeah, but it's not enough. It's not enough. Let me take a look at this for a second, guys, because I think I was trying to go fast, and I think I just went a bit too fast. So let me see those trades here that pass. They are yeah, they pass. P&L expiration. Target date. Let me change that. 1 second, guys. Okay, let me redo this. So PNL 154. Yeah, yeah, doesn't work, guys. The reason why it doesn't work, again, you can see all the negative values here. So again, if I reactivate as I had my risk and reward on the expiration date, okay, the way I had it, I'm looking for 25% maximum, is not giving me the right performance. And one of the reasons why is, I can see a real lack of liquidity on some of the strikes. You can see here 23 cents versus 2.05, for example. So even though if I disable some of the filter parameters, it passes. The reality is that I'm not getting what I want. Okay, so it seems that there is a little bit of lack of liquidity. Okay, so what I'm going to do is I'm going to give up on shorter expiration dates, and I'm going to look at this iron condor by looking all the way to September 17. I am thinking that since September 17 is a monthly expiration date, we should be able to find more liquidity there, and therefore now we may be able to have setups that work well. But before I confirm this is going to be my choice, I also need to look at the cone on that date, okay, and see if the cone is still allowing me, and it does, okay, because the location for the cone on the upper side is right here, right there, okay. Now the location for the cone on the bottom side may not work, and it seems that we're gonna have to do some adjustments. Okay, so let's go ahead and go back to the 55-minute time frame, because yes, you see we need to use some UFO which is lower than that. Okay, so where is the next UFO? So I'm gonna have to load more candles. The last time price was below those values was a long time ago. So let's load a bit more candles. Instead of 500, I'll do 5,000. And now UFOs below will reveal themselves, and we'll be able now to go ahead and plan this properly. Okay, you guys, by the way, have been very silent for a long time, and I understand I've been kind of like non-stop, so I get it. But I would indeed appreciate if you guys could go ahead and confirm you are with me. So now this is now looking like a very, very wide range. So given the fact that the stock is only $50+, I am concerned that we may not get the premium that we need. Okay, so this trade, it's not looking the best, to be honest. But anyway, let's give it a chance, since it doesn't take much time to plan. So we'll do it like that. So yeah, so I'm not very well centered. Okay, and the reason why is because there is a lot of distance between that UFO to that UFO. So look, I got many more stocks on the list, so I'm just gonna move to the next one on the list. Okay, and go for it. Okay, so I'm gonna look at Whirlpool Corporation. and try to find myself an easier trade to find instead of getting deeper and deeper and deeper into filtering. Again, the higher the price of the stock, the easier everything becomes. This is a $200+ stock, so if the trade is going to work, we're going to know fairly soon. Also, earnings for that stock are happening beyond October, so we can use any expiration date we want. So let's begin with August 27, which is right there. In this case, notice how the red line is above the blue line. So there is a little bit extra spice there on that option, on those options. Okay, so with those two reference lines, I'm gonna drop to the 55-minute time frame. Okay, I got 52% probability on those UFOs, and then I need to find two above and two below. Okay, and if I look for two above, I guess it's pretty clear, isn't it? It would be here. So those would be my two UFOs above. And then if I want to project something at more or less an equal distance, it doesn't need to be perfectly equal, but more or less. So that would be the distance. And if I take this line and I move it down, so that would bring me to either that UFO, okay, or the next one, okay? So to be honest, both are just as good or just as bad, if you wish, because one puts you at an advantage if the market was to fall, the other one puts you at a disadvantage if the market was to rally. So I'm gonna try with both, and then depending on the break-even points I get when I do my simulations, then I will either accept or discard the trade. Okay. Now notice that the range we're talking about is from 247 to 207, so it's like a $40 range. It's pretty wide, to be honest. If it works, it's going to be a pretty high probability trade, it's looking like. So we're going to move to spread select, add WHR, okay, and begin our planning. Okay, and you guys, again, I said a moment ago, you've been very silent. Just type a quick all good, all okay, something like that. Oh, I can see now the messages. Sorry for that, guys. I guess I didn't look at the right place. Thank you for that, Joanne, Mario. Thank you, Clive. Thank you very much. So we got Whirlpool. I said that I was going to start with August 27. So we're going to do August 27, August 20. Okay, so let's do that. Let's begin there. Given the width of the range, I think it's probably not going to work, but we're going to try. And again, we're going to do the same thing. Let me take a look at what's the minimum strike. In this case, minimum is 2.5, so I'll go for 2.5. And the maximum, we'll go for 10 because this is a $200 stock, so that works. So let's create 99 iron condors. Okay, let me review the filters I have. Yeah, so good. So now, again, update and sort the filter column. And we have multiple cases that pass. Okay, in this case we have many cases that pass. Okay, so that's a good one to have, but again, I want to make sure that based on the chart, my break-even points are in the right place. So 247, okay, is my minimum above. 207 is my minimum below. So let's take a look. Okay, in this case we got 266 is the break-even point. That's good. Indeed, is good. And the bottom part. Yeah, well, this one we're gonna have to ignore it, okay? With a zero bid, I guess there is a bad tick there with the data feed, and it, that trade qualified as valid, but I'm not gonna take it. And this one either because again we are missing on quotes from the data feed, okay? So we're gonna pass on that. But here we got 235, 204. That's not good enough. Again, we need minimum 240, 247. 266 is good, but missing quotes. That's quite rare, and normally data feed will not provide that. Here we got 243, okay, and we do have quotes, okay, but 243 is not enough. We need 247. Again, there are more cases if I keep going lower that pass, but in the end, I don't see any that is at least 247. Actually, there is one, 247 right here. Okay, 247, 248. This one would pass. Okay, so this one would pass, and the bottom part here shows us 219.40. Okay, so 219.40, which is not good because our minimum is 207. Okay, so 219 is more or less here. Okay, so in other words, as expected, the range is quite wide, and therefore using August 27 expiration is not enough. So I'm gonna add a couple more to see if they work or not, and then I will reconfirm with the chart that all is good. Okay, so again, we got many cases where it passes. Okay, again, did I disable? Okay, let me redo this. Okay, 99, here we go. So update filter. Okay, so we got many cases that pass: 241, 241, 246, 251, 251, 203. That would be good because, you know, we said we need 247, 207. So 251 is above, 203 is below. So we now have cases that would work and meet our rules. Okay, so my friends, we have a trade. I just now need to find the best one. Okay, so first let's reconfirm that using what was it, September 3, which is here. Okay, so notice how the probability cone is still below my top line and above my bottom line. And if I go for the next one, which is 910, same story. Okay, we are far from the lines. Actually, for all expiration dates, we are fine based on the range that we have found. I mean, it was indeed looking like very wide on the 55-minute time frame, and indeed it is when we throw stats into the mix. Okay, so with that in mind, now let's go back here and look at you know, what's the best setup that we can have. So we have setups here. Like if I start with my 251 here, for example, that's a minimum of 22%. If I look at my 247, my 247, 247 and 197 is providing 55. 247, 202 is providing 61. And that would meet as well. 247, 208, it's providing 35, and 247, 212, that one could work as well if we were to use the upper line, which is 212.5. But if you want to use the bottom one, it wouldn't. And again, and that would provide 33. So it seems that this one with the 53% seems to be the best one. Okay, this one, or this one with 55%. That one seems to be this one, the best one. Okay, 55, 57 instead of 49. This one seems to be the best one. Okay, so let's take a look at this because again, Whirlpool Corporation is not the most liquid stock in the world. So I want to be a bit picky and careful when it comes to understanding the trade. So this would be a trade made of selling the 245 and buying the 250, and selling the 205 and buying the 200 using September 10. That would be the Iron Condor that we are talking about. And you can see those are not the most liquid options. Okay, you can see that there is a pretty big difference between the bid and the ask. Okay, so I'm really not happy about that. I'm really not happy about that, and of course it's something that you know, we kind of know because Whirlpool is not the most liquid stock in the world. So look, the way I'm gonna work on this, especially after I've seen that on the daily time frame, all my projections for price are either below or above the purple lines. So the way I'm going to work on this is I'm going to go for the weekly expiration date, which is September 17. The monthly expiration date, which is September 17, because as we know, typically the monthly expiration dates carry much more liquidity. So I want to compare September 17, with September 10. Actually, I don't even want to compare. I'm not happy with what I see with September 10, so I'm just going to go for September 17. We should indeed be able to find a trade because there should be more liquidity and more premium given the fact that it's further out in time. So I would say, I mean, it would be kind of very, very much surprised if we didn't have a pass. Okay, we got two, so nice. And the passes that we have is 242, 207 and 252, 107. So interestingly enough, this one here, I will not take it here because there is no bid. So that stock is kind of having us struggle a little bit here. Yeah, so if you look at this one, okay, looks relatively good. Okay, 80 cents to $1, 175, 195, 3, 350. This one is not the best, but it's okay. 135, 160, not the best, but it's okay. So all of this is good. Okay, but unfortunately, the break-even points are 242, and we need 247. So even though the filter passes, is not giving us the range we need, and all the other ones fell, which means that even though I just said a second ago that by using September 17 we should be fine, the reality is that, remember when I mentioned earlier with the skew tool that sometimes some strikes got some advantages. I guess that we found those advantages on the September 10, but then because of lack of liquidity, I'm just not gonna go for it, because remember, I mean, you could do it and you could be patient and you may get filled at the right price. But what if you need to tweak the trade during the life of the trade? What if we need to roll the puts or roll the calls? So every time you need to do a tweak, then you're going to suffer liquidity every time. So it's not about the credit you take in at the beginning. It's the fact that we are not going to close our eyes and we're going to manage the trade. Okay. So in this sense, I will not accept such trade. And I'm going to continue working on the other opportunities. The next one in line would be Caterpillar. So let's take a look at this one and see if we are gonna find a good setup. Okay, so again, I'm gonna do the same. Sorry guys, I just clicked on I just dragged my probability cone. Let me bring it back to the last candle, follow the last bar. Here we go. So let's go ahead and do the same thing for Caterpillar. Okay. From here to here. Okay, so that would be the statistical range. If we do 55-minute time frame. Okay, so we need to find two UFOs above and below, and we got many. It's 48% or more, so this is good. We are gonna go for you know, if we do 1 and 2, or you know, since we got a collection of UFOs here, let's go to the bottom one. So we create a very nice range. I mean, I could afford to do that given the fact that earnings are so far out, and also given the fact I got many UFOs, red color UFOs above that are very close to each other. So I should be able to find a setup pretty easily, which is quite centered, which allows for the current price to be quite centered with 3 UFOs there. Okay, so I would say this is going to be the setup. Okay, 235 to 207. That's the setup. And now with that, you know, let's get our spread select. And let's restart. We are going to do a short iron condor, and not a vertical spread, not bull put, not bull call. We're gonna use, I'm just gonna go for multiple expiration dates here, 27, 3, 10, and 17. Okay. I'm going to start with a minimum strikes to be 2.5, maximum strikes I'll do 10, and with that we'll build 99 iron condors. And we're gonna use our filter, select from the template, iron condor preferred parameters. Okay. Okay. You know you got those parameters because it shows here. Okay. And with that, we're gonna sort, and we got many of those trades that pass. Okay. So now October 27, we got multiple of those trades that pass, and that creates range, which is 228, 228, 228, 235. Okay. So we got 235, but then on the bottom part is 209. And if I'm not mistaken, let me float this window. If I'm not mistaken, we need 206. Okay, so 235 is fine, but we also need 206, and this is 209. So that means that August 27 is not providing what we need. So I'm just gonna update this without August 27 and resort. And now look at the next one. So September 3, September 10, September 17 is there. We got multiple filters that pass. 231, 231, 231, 241. Okay, so 241 and 203 passes. Okay, and that would be September 10. 261, 203 pass. 232, no. 232, no. 236, no, doesn't pass. So we basically we have these three ones, these 3 iron condors with pass. Okay, those are the 3 that pass. Liquidity seem okay, 94. Yeah, that's fine from a liquidity point of view. I'm just looking at the various strikes. That I'm not happy. Okay, this I am not happy. 0.19 and 245. I'm really not happy about that. 1 cent, 137. Really not happy about that. So I'm gonna skip that, and therefore I will focus on the two I have above. Okay, which is either that one or this one. Okay, and by the way, notice that this now is showing 231. So I guess I didn't look at this correctly. Actually, we only have one that passes properly and meet our rules. Is this one? That's it. That's the one, my friends. Okay, so this iron condor, it's valid. It provides a break-even point above of 241. We only needed 235. It provides a break-even point below of 203, 204. We needed 206, even better. This iron condor provides a credit of $103 with a risk of 396.5. So this is a 26.16% return on investment. We were shooting for 25 minimum. We got 26. It meets the rules. Okay. Therefore, this is the trade that we are going to execute. Okay. This is the trade that we're going to execute. I'm just going to put it here on the screen so you guys can see it properly. And I'm going to go ahead and place the order on TOS. Okay, this trade is valid. Okay, I will also go ahead and copy this position so I can put it in my position panel. So then we can manage it in future sessions. Okay, cool. Okay, so you can take a screenshot. Okay, I'll just give you one moment. Okay, I'll give you just a sec. Yeah. Okay, let me take a look at the chat box because I was just focusing there on the screen. Joe, couldn't your minimum credit be built into the parameters in your new platform? Yeah, it is built in on the filter. Oh, you mean the credit for the spread? Okay, yeah, we could certainly consider adding that one. That's a good thought. Let's see if we can add that before we launch it. If not, we'll do it after. Ahmed, Jose, the options volume shows 785. Is that right? I didn't check the options volume, and to be honest, it really doesn't matter to me because the volume is something that comes after, just like the open interest. I mean, if the underlying is liquid, okay, typically when you place an order, you will tend to get filled because what market makers will do is give you the option and hedge against your trade with shares. So even if you didn't have any volume or you have low open interest, if the stock is quite liquid, normally you'll have more or less a good time to get filled. And in this case, we're using an options list, which is penny increment options. So you should be quite okay to get in. Now, in cases like before where I have missing quotes or the spread is very wide, so while you should have an easy time to get filled, that also telling me that the market makers got limited interest in making it easy. And therefore I don't want to go there. But looking at volume will not really give me an insight into how easy I'm going to get filled. It's just telling me how many contracts got filled already today. Maybe those guys place market orders. That would be crazy, but some people are indeed crazy. So I'm just basically looking at the bid and the ask. Okay, and this is something really that we have to train our eyes to be looking at those two columns and basically develop that skill of getting an impression of if that's good enough or not. Okay, and this is something that we need to do with our eyes. Okay, anyway, so let's go for it. Let's place the order. I'm gonna get TOS. This is Caterpillar. So we are doing and we got 5 minutes for the session to conclude. So let's see if we can do this quick so we can still find a short trade. Okay, I'd love to find a short. So we are using September 10 expiration. Okay, so September 10. Okay, right click, sell an iron condor, and the strikes that we select on the call side, we said we're going to be 240 to 45 on the call side. Okay, so 240 to 45. This is what I'm going to select on the call side. 240 245, and on the put side we are doing 205 200. Okay, so 205 200. That's the put side. This provides a credit based on the simulation tool of TOS of 101. Real time is looking like more like 95 cents. So I'm not sure exactly how much we're gonna get. Definitely no more than 105, and there's no way we're gonna get 105. So it seems that the credit is just a bit less than before, but I guess it's still fine. So I'm just gonna place an order with the 101 and see what happens. And if you guys are entering into this trade as well, and you are kind enough to share on the chat box, with prices you are being filled, that will help the other traders that are in the process of placing the order. So we know how much we're gonna get. Okay. The meantime, again, I'll give you the opportunity to take a screenshot very quick here as well. And in the meantime, I will take a sip of water too. Okay, got it. Yes, exactly, Ahmed. 0.95 is the real time one, and that's why I'm not being filled. Okay, so let me rectify this to replace the order, and we'll make it 0.95. Okay, and let's see if I get filled like that and how much I get. Okay, I got filled at 96. Okay, so based on the simulation, remember on my end is a simulation. So you guys may get 96, may get 98, may get 94. But again, it's a good reference to have 96. You may want to try that, okay? Because again, TOS, while it's a simulation, it tries to mimic and emulate the market. And, again, you may get that. So anyway, we got the trade, okay? We got an iron condor on Caterpillar. So thank you very much, trade. And now on the last 5 minutes of the session, what I would like to do is to try to find a short trade. Okay, that's what I would like to find. I will, customize the prices there on my position panel later on. So we can then talk about this trade into the future, okay? Now, what else? Let me do the right thing here. So I'm gonna bring the matrix. Would like to find a shorting opportunity to offset the long first solar, okay? To do that, I'm gonna be looking at options or markets that have implied volatility for puts greater than implied volatility for calls. So I'm going to start with that. I'm going to look for options that are very cheap. So I'm going to look at, and you know what? I'm just going to keep this simple because the other day was a bit of confusion with the put and the call and this. So you know what? I'm just going to use the mean and that's it. So mean less than 20. Okay. The difference really, to be honest, there's no difference basically. So I'm just going to go with that. So negative CIV spread. The CIV is below the 20 percentile. And we want stocks that are weak and that belong to groups that are weak. And ideally, and I don't think I'm going to find so many of those, but ideally, I would also want the climate to be down in the daily and the climate to be down early on the weekly. Okay, same setup that we found before. That's what I would be looking for. And I was expecting nothing to show up, especially from a climate point of view. This is very restrictive. Yes. So I'm restricting way too much. Why am I restricting way too much? Because again, what's the S&P doing? It's in an uptrend, a beautiful uptrend, amazing uptrend, isn't it? You're not going to have weekly climates and daily climates pointing down in too many markets. Okay. So we do have multiple symbols. That's good. But I'm going to be a bit more relaxed here with my demands and just look for climates which are sensible down and see if we got any of those. And we don't have any of those. Okay. We don't have any of those. So because we don't have any of those, then what I'm going to do is I'm going to look for climates that are up, but they are late. So they are super exhausted climates to the upside. Okay. Super exhausted. And that may give us some opportunity. Okay. That's one possibility. Okay. I just got 2 minutes, so we need to explain more if I do that. So let me try something else that may give you an opportunity, which is to look for sensible climates down. Let's see if that I find any. Yes, I got 2. So let's take a look at those 2. That's probably easier for the last 2 minutes in the session. We're going to take a bit longer than that, of course. UPS and FedEx. So let's take a look at UPS. Well, UPS is in a climate that has been lasting for way too long. It should be 4 and it's been there for a long time. What about FedEx? Same with FedEx. Okay, so for me to give a yes, okay, I cannot be trading a daily time frame on this. Okay, and remember I told you last week that I'm going to be more relaxed when it comes to the time frames that we use. And in this case, I am looking at a 2-day time frame with FedEx, which is pointing at 6 out of 4. Okay, so it's been running down for a bit too long. What about UPS? 6 out of 5 is better, but still not too good. So what about a 3-day time frame? 4 out of 4, that's okay. What about FedEx? 5 out of 4, that's not okay. Okay, so I'm going to rely on UPS to see if I find a trade. And again, this is a trade as a hedge. Okay, so while you could be looking for UFOs around 198, and if the market was to rally around 198, and to be honest, you will find no UFOs because there is empty space there. There is an open gap. So there is no UFOs. But still, in this case, I'm not looking at UFOs. I'm looking at entering as soon as I can as a hedge, right? Because of the comments that we have made earlier when it comes to the S&P. I'm assuming you have a portfolio with multiple longs. We see the threat of a possible correction in the S&P. So I want to throw some shorting opportunity to hedge a little bit my longs, okay? So because it's a hedge, I'm going to be okay with being less precise with the timing. And in this sense, I'm going to be using an 8-minute time frame, okay? And looking for any opportunity which is bearish. In this case, all Elliott wave indications, okay? All the Elliott wave indications that we had are bullish. We didn't have any, well, actually we got one, but that was on another day. It was on August 9. It was not today. So we got one, but all the other indications were bullish. So from an Elliott wave point of view, unless, look at that, a new bullish indication just came out. Okay, so based on Elliott wave, we are supposed to go all the way here. So definitely no time to enter a hedge, right? So while you want to enter a hedge as soon as possible, you don't want to enter it, if you are getting evidence that UPS is going to go higher, because then that hedge would not help you. So what we're going to do is either wait for an Elliott wave turning point indication to show up, just like this one that just showed up, but instead of show below the candles, to show above the candles. So it's a bearish one, or we're going to look for the nearest identified pivot point, which is here. And if that market was to go ahead and start falling and cross that line, then you will want to come in. Okay, so that's the plan. Okay, now if we do that, what type of target are we expecting? Well, if the market goes below this, I just clicked twice. So if the market goes below this, so we are expecting the target to be more or less here, which is 186. Okay, 186. That's the value I got. I'm looking at the middle part of this projected target. Okay, 186. So what am I going to do? Okay, to profit from a trade going from the current price, I mean a bit lower, from 190 something all the way to 186. What am I going to do? Well, first I need to do is to calculate how long it's going to take to get to 186. That's the first thing. So notice that the target date is September 4. That's the estimation for how long it's going to take to get to the target date, September 4. Okay. Now, if we do September 4, okay, that's the minimum expression that we're going to use, but also I want to know more about when are those earnings. Okay, so if I look at earnings for that stock, okay, if I look at earnings for the stock, the next earnings are happening on October 27. So while September 4 is the date when I would expect to reach 186, okay, the expression date I'm going to use is actually October something, depending on what's available on the chain, ideally lining up with October 27. So I can benefit from the increase of value of those options as earnings are approaching. Not always possible, but I'm going to try. Okay. So what expiration dates are available? we got October 15. That's the nearest it goes. So that's going to be the one. Okay. Target date, we said 904. Okay. Target price, we said 186. Spread, let's build a bear put spread. Okay. That's what we're going to build. So we're going to build a bear put spread, directional down with a target of 186, expecting to reach the target on September 4, and therefore giving ourselves additional time, which is October 15 expiration. The minimum strike based on the option chain is 5. The distance from the current price to the target is like $10. So my minimum max range would be 10. I like to be very generous. So I got many choices with the options and then I pick the best. So I'm going to go for 50 just so I got many, many cases. And I'm going to build 99 of those cases. And now here are my trades. Okay, so now I'm going to go ahead and use my factory setting, my filters, and use my template, which is the template for bear put spread preferred parameters, okay, which is the strategy I have selected, is a bear put spread. So I'm going to click open, I'm going to click OK, see if something passes, and if it doesn't pass, then we'll talk about it. Okay, well, nothing is passing at the moment. Okay, so why is that? Okay, well, let's take a look. I mean, first of all, the fact that we start with $5 strike price increments, tells you that maybe some of those adjustments with the Greeks, for example, the gamma, I may not be able to meet that, or maybe my deltas cannot be that narrow range as well. So let's go ahead and first disable, my net spread exposure to Greeks selection to see if some of those combinations now work, because so far it was not. Okay, so now I got many combinations that work. So again, what was the issue? Well, the issue is that I always start being very picky with my conditions. But again, options gives you options, isn't it? And therefore, you can do many things with it. But at the same time, not all options chains are the same. Not all underlying are the same. You do a trade on Facebook, for example, you have so many contracts, so many strikes, so many everything. Other contracts, in this case, UPS using October 15, is not as good as you can see. Okay, so I cannot be that picky. Okay, so let's go ahead and unselect, a couple of those. I'm gonna get rid of Gamma, Target, and Vega. Okay, and see if I got those conditions being met or not. Okay, and it seems I am not finding those conditions being met. So what's the issue? Okay, what's the issue? My delta maybe should be right, because now it passes. So now let's take a look. Minus 35, minus 46. Yeah, so those are pretty big deltas. That one is 30, negative 30 delta. So wait a minute. Yes, I believe I didn't write this correctly. Because puts are negative. I believe I should have written it like this. Let's see. Update. Here we go. Now it does. Yeah, that was my bad. Okay, so now I got the deltas I want. I just wrote it backwards, guys. Sorry for that, because it's negative sign. So now, so let me get back to all my demands, okay, including the gamma and the vega, okay, and see if now it works. And now, yes. Okay, so I have a few cases now, only a few cases that pass, which is what I'm looking for. Exactly. Sorry for that. So now, what are those cases going to do for me? Okay, so let's analyze this a bit more, little by little, right? A little more slowly. So we got multiple possibilities here, which is to buy the 190, sell the 160, to buy the 190, sell the 175. So we got multiple possibilities that meet that criteria, okay? Now, notice that when I look at all those possibilities, okay, there is an issue, okay, and this is telling me that I've been too demanding. And the issue is that if I reach, okay, let me see. No, actually, here, if I reach my my target on the target date. Okay, so this is gonna make 225, this is gonna make 336. Okay, but then if I reach my target late, I'm gonna make less. Okay, and this is normal and very difficult to fix unless you have many strikes. Okay, because options lose value as time passes when you are buying a debit strategy. So that's gonna hurt. So that's what it is. But notice how the next one here on top is really being killed as time passes, where the other one more or less maintains the reward to risk ratio. This one goes from 58% return on investment to 4%, which is a very big drop. Okay, so in other words, the one that we will want to trade is this one below. Okay, buy the 195 put and sell the 175. This would be the trade to be taken that would do what we want. Okay, so I can show it to you here. Okay, that's the trade. And most importantly, I can also project it. Okay, and notice how if later in time the stock drops from 192 to 186, more or less here. So now notice how the trade is going to profit, and now you have that P&L increase. Okay, we said September 4. I've not been precise enough. September 4 is right there. September 4, 186, more or less there. Okay, something like that. So now you're gonna make the profit that was calculated earlier on the spread select. This is the combination that provides all those benefits. Okay, and any other combination could be fine, but the most efficient trade to be taken would be this one. Okay, so we're gonna conclude the session here, guys, because I have surpassed the time to end the session. You may want to take a screenshot so you keep a note of those particular strikes. Okay, buy the 195 put, sell the 175 put. Okay, so you may want to take note of that. But again, I want to go back in just a second. Okay, I'll give you a moment to take a screenshot. But in just a second, I want to go back to the chart to give you one more time the indication for the timing, because you don't want to do the trade right now immediately. Remember, you need either an Elliott wave turning point, either the break of a pivot low. You need your timing condition to get in, which normally we go for the UFOs. But when we are doing a hedging trade, okay, when we're doing a hedging trade, we are open to be a bit more flexible and less precise with the timing, because what we cannot do is to miss the hedge. And then next thing you know, now we don't get filled today, and next thing you know, next day, because the climate on the S&P was stretched, next thing you know, now we have a gap down, and now you're in trouble without the hedge in. So you want to get in as soon as you can. Okay, so we need to keep that in mind. Okay, so I want to go back to the chart to give you that indication one more time. Okay, so I'll close spread select, I'll close the risk graph, close the projection, and back to the 8-minute time frame in here. So again, Elliott wave indication is doing what it's supposed to do, is getting closer to the target. So nothing to be done so far. Again, waiting for one of those diamonds or one of those blue arrows or yellow arrows to form on the way down, or waiting so far for this gray triangle, which is the pivot low, to be broken and then to get into the trade. Okay, which this is intraday price action. Okay, so this is an 8-minute time frame. So I mean, people in New York may go for lunch now because it's time for lunch in New York, and when they're back for lunch, next thing you know, the stock falls and this is your entry. Okay, so watch it, be ready, and if needed, so now you know what your trade is to be taken. Yes, I get you, Christian, because you don't have the Elliott wave tool, so you cannot do that, but at least you know where's the pivot low. Okay, again, I said it yesterday, we are so close to release top, so close, you guys. I'm sure you imagine how hard we are working to get it out there. And again, it's basically, this is a major software development, and therefore they are those final, let's call it like closing down certain pieces of code, like kind of like ticking, like done, right, like a final confirmation of everything, and it's taking time. Okay, so but we are almost there. Okay, so very soon you're gonna have this. Very good. Everyone, my pleasure. We are done with the session. We surpassed the time by 15 minutes, guys. So thank you so much. As always, I love to be respectful of everyone's time, of course. And I try my best, but sometimes again, I have to go a little further. And you guys stay with me, which means a lot. I love your passion. As you know, this is my little special time during the week where, on the Wednesdays and the Thursdays we get together and we trade. So thanks for joining me. Thanks for the support. Thanks for being there, and also congrats for the hard work. I know some of you are working very hard on picking up your option skills. So now it's also on our end to work hard to give you access to the tools as soon as possible, because it's going to make your life easier. In any case, the last thing I will say before we go, if you think about the things that we have been doing since the last 3-4 weeks, especially since I started using top in the sessions, first, we for a few sessions we spent a lot of time going into the tools and the rationale behind the tools, and our option sessions were for a moment a little bit like computer software sessions, a little bit, because I was spending a lot of time on the platform itself, which was needed but not ideal. But now that we are a bit more familiar with the platform, isn't it? We are now going faster, isn't it? And we've got examples of long trades. One example is for solar. We've got example of short trades. One short trade could be UPS. We just did. And then we've also got examples of non-directional trades with GLW, as well as Caterpillar that we executed earlier today. So you are getting a feel, I guess, for how is it going to be and how much faster we're going to move as we get all accustomed and ready, with the tools. Okay, so this is going to become much more efficient. And the beauty as well is that if we are more efficient finding trades and executing trades, that also means that the amount of trades that we're going to have on TOS here on the simulation, let me get it on the screen, is going to be more. And the more trades we got there, the more trade management conversations we're going to have, like we did weeks ago. And that is extremely enriching, because you've seen the difference between taking an options trade, close your eyes and wait until expiration, or wait until the target, versus take the trade and then tweak, roll, massage. So it's made a difference, isn't it? So again, we're going to have many more trades, larger portfolios, more stuff to talk about. And again, I'm very excited about everything that is coming with the use of the tools, and the fact that the tools not only will allow us to be better traders, but also to get into conversations that we could not because of lack of time. Now we will have. Okay, so anyway, you guys take care, trade safe, keep up the good work. Thanks again for being there and the support. And see you next week on the Wednesday. And in the meantime, if you need anything, guys, you know my email, jose@tradictiv.com. Contact me, guys. You guys take care. Bye-bye.